Now, as we look at this week and the calendar ahead of us, the first question to answer is, why do we look at these calendar events in advance? Quite simply because they provide high probability trading opportunities. That's why we look at them. So this is why we look at the calendar in advance. On the 10th of April, we recognised the US CPI print was likely to be a major focus of the markets, with them trying to work out whether the Fed was going to stick to its 3 rate cuts that it signalled in March's meeting, or whether it might be moving more towards 2 rate cuts. If we started to see high inflation, that would open the door for a 2 rate cut narrative, and we'd expect to see strong dollar buying, and we were looking for Euro US dollar selling and Pound US dollar selling if we saw the CPI print coming in with these metrics at 0.4% or higher for the core, 3.8% or higher for the year on year, the month on month 0.4%, 3.6% or higher for the headline year on year. If we saw those prints, then we would have been expecting some dollar buying. And with the Bank of England's Bailey recently saying after the last Bank of England meeting that rate cuts are in play, pound US dollar selling made sense. We also noted at the time that the yield spread between the rate expectations for the euro and the pound were widening, meaning that if we had reasons to sell the euro US dollar or sell the pound US dollar, we could see some volatile price action. So we did this here with our live risk event, and this is just recorded shortly after the event, and you can see we had the CPI year on year, the core reading 3.8, the month on month above the market's maximum expectations, the month on month 0.4%, and the year on year 3.5%. This strong green board, and you can see that the month on month above marks and maximum expectations trading this live. So yes, that is significant enough to buy the dollar. So euro US dollar or pound US dollar selling made sense. We saw the dollar strength, and we can see here how the euro US dollar has just fallen out of that meeting.
Just back to commentary from Matt.
And pound US dollar just again fallen out of that meeting, and we are looking for a potential swing trade opportunity if we get back up to that 1.2640. But there were 2 short-term trading opportunities, and a number of folks took advantage of that during our live event trading. So that, folks, is why we look at the economic calendar in advance to spot high probability trading opportunities before they appear. So let's look at this week. And this week, we do have some really interesting economic calendar events coming up. So let's just take a look through. So first we have US retail sales. I'm not particularly expecting that to be a high probability opportunity. Although if we saw, very strong US retail sales, we could see a little bit more dollar strength. But the main event that I'm looking at is Tuesday, when we've got Canadian CPI data. Now, the Bank of Canada met last week, and they did have a fairly benign interest rate meeting. The outlook is that yes, eventually we're expecting the Bank of Canada to start cutting interest rates, and we are expecting that cut to start coming. And Macklem said that a June rate cut is possible, but they're looking for further evidence that underlying inflation is easing. So if we see the CPI data surprising markets, coming in below markets' minimum expectations, then we'd expect to see some significant downside in the CAD. And dollar CAD longs look particularly attractive. It's one event not to miss next week. Also, we've got UK labour data coming out early on Tuesday. This again is very interesting. Now, the Bank of England, after their 20th of March meeting, Bank of England's Bailey said that the path to Bank of England rate cuts are now in play. And if we just take a look at the pound on an index level, let's just have a look here at the pound at index level, just bear with me as we just pull over to it. We can see that the pound sort of sold off from those highs at an index level, and every rally has been sold. So what markets are looking for now is they're looking for a reason to sell the pound. And if we did see very weak labour data on Tuesday, that would be a sufficient reason to sell the pound. So we're definitely going to be keeping an eye on that UK data print on Tuesday morning. We've also got Bank of England's Governor Bailey speaking. Now this will be interesting. Does he contradict what he said after the last Bank of England meeting? Does he stress inflation pressures? And the reason that's quite interesting to look at is because if you look at services inflation, you are starting to see a little bit of a divergence here between the UK and the rest of the world. You can see that the UK has got very high service inflation, higher than Australia, Germany, higher than the Eurozone, higher than the US, services inflation. Now, Bank of England's Green mentioned that this week, that services inflation, is a bit of a different reason for the Bank of England to need to keep rates higher for longer, essentially. He didn't say it like that. He basically said, rate cuts are a way off. So does Bailey give a nod to what Green's saying? And if you certainly look at the data, there would be justification for a slightly less dovish Bank of England's Bailey. It's a narrative to watch. Then the following day, we have the UK CPI print. This is obviously going to be important. And if we see a big miss in the CPI print, hooray, hooray, investors are likely to cheer that with pound selling. And if it's a strong move higher, then the rate cuts being in play narrative will be questioned. Obviously, we have to read what happens here in light of what Bailey says. So that analysis will develop in real time as we go through the week. Again, Bank of England Bailey speaking post CPI. So we've got a Bailey sandwich there with CPI in the middle. Either way, there could well be some good opportunities over that 24-hour period. Then we have some Aussie employment data. Now this will be interesting. The last RBA interest rate meeting has seen a more neutral stance from the RBA. They sort of said the board is not ruling anything in or out on interest rates. Whereas previously they said a further increase in interest rates can't be ruled out. So they've moved from a slightly hawkish stance to a more neutral stance. Does the Labour data justify that? Does that give them reasons for being more cautious? Or is the labour market strong in Australia? We have seen some weakness in the Aussie dollar over this last week with the CPI print coming in hotter and stocks being pressured. That's weakened the Antipodeans. Aussie dollar has been, being hit by that. So it will be interesting to see what happens in terms of employment data. Strong employment data could see a little uptick in the Aussie dollar. Don't forget copper as well has been really moving higher. There's a big green energy narrative that there's going to be a lack of copper supply over the medium term, and copper's expected to gain over the next sort of 2, 3, 4 years significantly. It's one bull market theme that's starting to gain traction. So Aussie dollar will be very interesting over the Aussie employment release. Then we've got the new normal jobs data from the US. I'm not expecting that to particularly move markets. Core CPI coming out for the yen, again, not expecting that to move markets, but if it comes in above markets maximum expectations, might see a bit of yen strength. But as we've been mentioning in our webinars, the yen really is being weakened at the moment by that strong move higher in US 10-year yields. If that's new to you, just put a dollar yen pair on the chart and overlay it with a US 10-year yield, and you'll see how close dollar yen tracks the bond market in the US. So really, yes, we could see a reaction in the yen, but only if it comes in super strong. Again, if it's super weak, then we can see a bit more dollar yen upside, but then that runs the risk of Ministry of Finance intervention from Japan. So there's a bit of a controversy, danger, volatility over the yen, and that could come to a head during this week. And this is obviously one key print. We'll have a little look at it. There might be an opportunity there, but I think the best opportunity I can see at this stage is a really strong print. We then got the UK retail sales data to end the week, which could provide an opportunity depending on what happens with the CPI and Bailey's comments during the week. So that's what we've got to look forward to. And don't forget, we cover these events, many of them live, and we prepare with a cheat sheet before each major event, so we know precisely what to look for and which pairs are most likely to move.